Yo, I'm Brendan, and these are 5 common mistakes that people do whenever they start investing, 2025 edition. These are things that I've just noticed over the course of my life, talking to people, listening to the reasons why they still somehow aren't investing, things that hold them back, or mistakes they make once they actually start investing. So in just a few minutes, you're going to know what all these problems are and know how to avoid them so that you don't make these mistakes. A lot of success in life is just avoiding mistakes. As you can see by my outfit today and my nose strip, I'm about to go on a run. One of the mistakes that I made whenever I started running again was just going out too hard, running too fast, running too much too soon, and my 38-year-old body just couldn't take it anymore. It just got hurt, felt terrible, and so I have to avoid the mistake of going out too hard too soon. This is the investing version of that kind of advice. Number 1 thing you want to avoid as you're starting to invest is the news, following it, relying on it, acting on it. Oftentimes, the market acts in counterintuitive ways to what you might expect. So just because you read a news story and you interpret it to mean a certain thing that then is going to impact the stock market or impact something you're investing in, and you act on that, it doesn't mean it's going to do that. The market's not always rational. Like recently, very recently, Tesla had sales drop year over year. This is the first time they haven't had sales grow year over year. So this report comes out. That's a very bad thing for an automaker. And what's happened to the Tesla stock price recently? It shot up like a ridiculous amount. That doesn't make sense. There are, of course, other things at play there that make people have confidence that Tesla is going to be more profitable in the future. And so that drove the stock price up. But investing is one of these things that we can't always take to be rational because people are irrational. Common mistake number 2 is paying attention to negatives. There's always a news story or a person or a reason to think the sky is falling. The doomsday preppers are right. We've got to be prepared for the worst. And the truth is that at some point, if you're always predicting bad things to happen, you're going to be right. Like a broken clock is right twice a day. But most of the time, it's not a productive strategy for us. Outside of 1 or 2 high level investing firms that have taken advantage of black swan events, all the rest of us typically lose on trying to predict bad stuff from happening because it's critical that you do that at the right time. Both the news and negatives rely on you having perfect timing to set things up to make sure that you make money. And when most of us don't have perfect timing, that means most of us end up losing money when we rely on that to inform how we invest. Mistake number 3 is waiting. Waiting to invest because you think that something's going to happen in the near future that's going to make it a better time to invest. Oh, there's going to be negative things that happen, so I'll invest when it goes down. Or waiting until you feel more comfortable, or waiting until you have more information. Waiting is a mistake here. The best time to get started investing was 45 years ago. The next best time is today. Okay, maybe for our generation, the best time to invest was like 2009, but the next best time after that is today. And then even when you do get started investing, a very, very common thing people talk about is buying the dip. You see that there's some volatility in the market. The stock market goes down for a few days. Oh, now I need to buy because stocks are on sale. Whenever you actually zoom out and look at the stock market over the course of 5, 10, 20 years, these little dips that happen that might feel really significant today because maybe it's down 5% are nothing. It still is not a good time to buy compared to if you'd have just bought a year or 2 or 3 years ago, which means that if that trend continues, that today is the cheapest they will ever be. Today is the best possible time to have bought into the stock market because in the future, it's going to be worth more. So don't wait. That's a mistake. Investing mistake number 4 is one that I hear about in the comments a lot, and that's trying to fix your income through investing. Investing ain't for that. It's for long-term net worth growth. If you think that somehow you're going to pick a great dividend stock, throw $50 a month into it, and it's going to end up generating enough income for you to be able to fix your lifestyle, pay off bills, do that kind of thing, that's not what it's intended to do, and it's not going to happen for you. An income problem needs to be fixed through income. Dig into your job, dig into your industry, learn what it takes to add value and make the company more money, try and get a promotion. If you can't get a promotion, then switch jobs because studies show that people who switch jobs every 3 or 4 years and are getting promoted, they're not like getting fired, end up with higher salaries than people who stick with the same company for their whole entire career. And so we almost have to treat our career like a game or treat your career as if it is your job to manage the way that you progress over time. Then when you fix your income problem, that allows you to have that margin of income left over to invest a bunch of money, which then sets you up for the future. The 5th investing mistake is one that people do oftentimes after they've been investing for a little while, and that's called overcomplicating. People think that they need the most optimized tax strategy. We need the most advanced trading tools and charts and indicators. I want to have like a heads-up display with just tickers and prices and all this data flowing by me all the time so I can make the best decisions. We need the one best investing service that will somehow magically make you rich because they have the best features. So that means I've got to shop around for the best investing service for 6 months until I find just the right one, and then I'll start investing. Look, the truth is, a taxable brokerage account, which is the most basic kind, with any trustworthy company that can host it for you, any kind of investing brokerage that's decent, with basic index funds in it, will do the trick. There are so many tax advantages to even a taxable brokerage account that it's ridiculous. If we overcomplicate things, we slow down, we aren't able to get investing as early as we want to and need to, and then we're missing out. It's just like me trying to lose 20 pounds in 2025. I need a pretty basic plan, because I would love to just get lost in spreadsheets and running plans and what's the best kind of protein to synthesize after a workout and what's a special supplement that's going to help me over here and over there. Really? Here's what I need to do. Eat less junk food. I had like 25 marshmallows last night, so confession time. And instead of that, I need to eat more healthy food. And then part 2 of that plan is just move my body a lot more. Get outside, move around, do some exercise, get sweaty. That's it. Those goals for me look like taking 4 million steps this year, run a road marathon, run some kind of ultra marathon, have some mountain adventures, have some fun. The investing version of that would be open a taxable brokerage account with some company you've heard of before that has a good reputation. I don't care who they are. Then literally invest as much money as you possibly can today. Keep some cash for an emergency fund just in case, $1,000, $3,000, something like that. Every other penny that you have, shovel it into the investing account. Make investing the most important thing you do. Repeat that for 10 years and you'll probably be set if you're my age or younger. I know 10 years is a long time, but like health, it's one of these things that you can't stop managing. Your investing is something you've got to keep doing. Your money is something you got to keep managing, just like your health and your body, because it's just one of those things. Wasn't that a book by Simon Sinek, The Infinite Game? It's a pretty interesting book. You should read it if you haven't already. Read it while you exercise today. Get the audiobook. Go on a walk after you start investing. Don't get me wrong. I love hacks. I love ways to try and shortcut our success and our progress, but oftentimes we're going to actually make the best progress by avoiding mistakes. So avoid these first 5 mistakes. Watch this video next to keep learning about investing and then get investing today. I love you. See you later. Bye.